Good morning and welcome to another Market Open. It is August 9th, 2023. It is 9:21 a.m. Thank you, everybody, for being here with me. We've got a lot to talk about. We got a brand new Palantir partnership that dropped this morning with Azul Energy, so we'll be getting into that. Cathie Wood has purchased 818,373 shares of Palantir. So I did a live stream yesterday, and I talked about it for about 40 minutes and kind of gave my raw thoughts. I have some more thoughts on why Cathie Wood bought back into Palantir. She hasn't bought since May, so now she's back in. And we got Roblox earnings to cover, along with some earnings yesterday that were very interesting. Two companies, Upstart, that didn't do that well, and Celsius, that did do really well. Celsius, I was thinking of buying it a couple of months ago. I was like, you know what? Feels kind of overvalued. $11 billion, multiple is kind of crazy. It's just an energy drink. Apparently, it has a lot of energy because everyone is drinking this energy drink. So we're going to get through a lot of things today on the Market Open. Canman, Dan, Chris C, Gators, David, Van, Ray, Jager, JBG, Joseph, Broccoli Bob, Julio, Seth Roth, Iceman, JJ, David, Aro, Peter, Joseph Viegas, Kim Yoon, Tom Brady. Okay, we got Tom Brady in the chat. Adam, what's up? David, Martin, Lars, AJ, John, Philip, Cunham, Emmanuel, what's up, man? Emmanuel, Kent, Surrey, J Duff, Philip Rizzo, Zocold, Morrow, John Lope. Thank you all for being here today. Hims is also very interesting. Adam has got me thinking about Hims. I'm getting DMs about Hims. I'm looking into Hims, man. 83% revenue growth year over year, $1.3 billion market cap. I don't know if they're profitable yet, but I know they're getting close to profitability. Hims is getting very, very, very interesting. So getting closer to thinking about that, and will be fun. Emmanuel, yeah, thank you for being here. For those that don't know Emmanuel was my 11th subscriber ever. Where is his comment? Right here. Emmanuel, there he is in his beautiful hat, 20X. He was my 11th subscriber ever. I remember he messaged me after the first couple of videos I made on YouTube. So Emmanuel, man, I love that you're here. Thank you for being here today. Someone said, Josh said, Amit, I'd love to interview. Any interest? Yes, DM me at Amit is investing on Twitter, and we will set up the interview. Now, before we get into it, real quick, we're going to do the word of the day. I always forget to do this, so I want to do this early in the beginning before we get to the Market Open. Word of the day. The word of the day is reticent. Reticent is used as a synonym of reserved to describe someone who does not readily open or talk to others. So she is reticent about discussing her personal business with anyone. I am not reticent about discussing my personal feelings for the company that rhymes with Palantir. I am not reticent to discuss that. So make sure you use reticent in some word of the day today throughout your entire life. And when you use reticent, you got to think of the Market Open. I don't care where you are. When you just got to say the word reticent. If you're talking to like the Dunkin' Donuts employee or something, and they're like, "Oh, would you like this?" I'm like, no, I'm very reticent to chocolate donuts. And just remember the Market Open. That's all I want you to do. All right. First news of the day: Palantir expands presence in industry, entering multi-year partnership with Azul Energy. Quote from the global head of energy at Palantir: "We are excited to work with Azul Energy and expand our presence in the industry. We've worked and operating in for more than a decade. Palantir Foundry will serve as the digital foundation for Azul Energy." So this isn't an AIP contract. This is a Foundry contract with further upstream production business, helping them manage and grow their production safely and optimally. Foundry is going to be deployed to help manage their current 200,000 barrels of daily oil production and support their growth goal of 250,000 barrels a day. Azul Energy is I believe, a subsidiary of BP as well. So it makes sense that Palantir was able to enter this partnership. It seems like they were working with them in the past, and now they have entered a multi-year partnership. This is kind of an extension of a multi-year partnership. As Palantir says, we expand our presence in the industry. But this is really interesting. Palantir has worked in the energy sector for more than a decade, helping customers from small operators to Fortune 500 companies. Palantir's customers have harnessed the power of Foundry to deliver both immediate results and compounding value across a wide range of use cases. Why is this important? Because this is another client that can be upsold on AIP. Foundry creates an ontology of all your data, gets everything structured, ready to go. And then after a little while, Palantir's like, hey, you need large language models to make yourself even more efficient and effective. Why don't you try out AIP? And that is a client that they can be able to upsell. So it's another good deal that they have in the energy industry. Energy is a multi-trillion-dollar industry, especially as we transition from oil and gas to renewables, which will be happening over the next couple of decades. And Palantir being able to solve a lot of those problems that are big data problems are very important in order for them to be able to do. Okay, so that was kind of the first news of the day. Let's get to the other news, for those that have not seen, Cathie Wood has purchased some shares in Palantir. Okay, this thing is not tweeting. Let's move out of there. Here you go. So this is from last night. Cathie Wood bought 818,373 shares of Palantir. Now, why is this important? Again, I did an entire live stream on that, so you can watch that from yesterday. But what's really important about this is Cathie is feeling, as you can see, 76,000 shares in ARK F, the fintech fund, 117,000 in ARK W, and then 624,000 in the flagship ARK KK fund. My reasoning for this, I have a couple of reasons I just wrote here on Twitter last night, or X as they call it. So why I think she's back. Number one, company authorizes $1 billion in share buyback, signaling to the market that they believe these prices are cheap. At the end of the day, Cathie as investor is like, look, if you think it's cheap at 16, maybe I should think it's cheap at 16 if you're willing to do your own share buybacks. Now they're just 1 quarter away from S&P 500 inclusion. That's going to be a big deal. A lot of institutional investors are going to get in. 400 clients in the pipeline for flagship AI product. This is what management said. If they get even $2 million a year off each of those clients, it's an additional $800 million in ARR every single year. And there's companies that are going to pay a lot more than $2 million. So just imagine that. You've got 400 clients in the pipeline for AIP. In a year, if you start monetizing those 400 clients at $2 million on average, that's $800 million. At $3 million on average, that's $1.2 billion in ARR. And that's outside of the entire other business that you're doing with Foundry, Gotham, Apollo, because they haven't monetized AIP at all. That's what they've said on the earnings. They have not monetized AIP at all. So the monetization of it is primed to help. Dan Ives upgrading it to 25. Raymond James upgrading it to 22. More of the street beginning to feel these prices could consolidate, so Cathie doesn't want to miss the boat. Cathie was sitting on 5.3 million shares at $9, so averaging up to 12 by buying at 16 may have seemed like a no-brainer, given she'd still be up on the position, which she is. And ARK believes that AI is the largest opportunity over the next decade, so it makes sense to develop some type of Palantir position if they truly do become one of a handful of AI monopolies over the next decade. So I think it's overall a good buy by Cathie, and it makes sense that she would want to buy the stock. Okay, let's get into some of the charts and see what we've got going on when it comes to price action. And then I want to play a couple of clips for why we think a bull market is lasting for the next couple of years. There was some interesting logic for why the bull market is not going away anytime soon. Now, we've had a choppy August so far, all right? So let's go to the S&P 500. And when I say choppy, it's interesting because we're at 449 on the S&P. We were 450 or 455 the week of the FOMC meeting, which was about 2 weeks ago. So although it's been a choppy August, we're down like 1%, 2%, maybe like 1.5% on the S&P. And so the choppiness of August, I think, maybe still has to reveal itself a lot more. Obviously, individual stocks have gotten hammered, like PayPal. But overall, if this is what a choppy August is on the S&P, I'll take it. Now, like maybe we have more to go. Maybe we have that 10% correction is coming. We get CPI data, I think, on the 11th. Or it might be next week, or I think it is on the 11th. And so maybe that reaccelerates inflation and things go bad. But what if we get a 2 handle on inflation? What if it's 2.9? It's going to be really interesting to kind of see how August turns out for the economy, given we do have some macro tailwinds that are in our favor, although we've had macro headwinds with credit rating agencies decline different parts for the United States. All right, August 9th, 2023, 9:30 a.m. It is time to open up the greatest compounder of wealth in human history. The stock market is now open. Wake your ass up and do not be reticent about chasing your dreams. S&P 500 at 448, up 0.03%. Lucid is down 3%. Rivian, which I think the earnings were kind of not that bad, is up 0.112%. Datadog got hammered yesterday from 118, as you can see that, down to $88. It is up 0.5%. PayPal at 63. TFC Truist getting smacked today at $32.03. Google at 132. Palantir $16.68, down 2% on the day. Again, still at $16, up 103% over the past couple months. So not bad, consolidating, hopefully consolidating at the $16 range. Tesla at $249. Tesla going down a little bit today. Enphase at $136, recovering a little bit from yesterday at $133. Open Door at $3.05. Fubo TV $2.50. NASDAQ 13,886, kind of unchanged from yesterday, really flat. So pretty much nothing moving it up or down. This is the decline from Moody's that we saw yesterday. Apple is now trading at January 2022 prices at $180. Remember, the reason it was up 44% year to date is because it fell to 129, but it was at 180 in January 2022. So it's kind of the same if you bought it in January 2022 and you haven't DCA'd. It's at the same price since then. SoFi at $9.20. We got Uber at $45.15. Amazon at $140. Amazon has not given up the earnings pop at all. It was up from $128 to $140, so it's maintaining its premium and not really giving it away. Neo at $14. Meta at $312. Nikola at $2.01. Tupperware at $4.84. This one's still keeping up some momentum. Robinhood at $11.06. Shopify $56. TQQQ at $41. QQQ at $3.72. Nvidia at $4.40. I don't know when Nvidia reports earnings. I think it's next week. Nvidia, I believe the earnings are going to be amazing because they're going to live up to the hype that they said in terms of revenue guidance. So Nvidia right now at $4.39 below. Microsoft at $3.26. Netflix at $4.39, recovering a little bit from its earnings decline. And regionals are down. KeyBank, Zion Bank, Snowflake is down at $157, and Oracle is down at $115. Snowflake now trading at a 22 times price to sales. It was at 25 a couple of weeks ago. So Snowflake is now down. Now Roblox, this is the big story of the day. Roblox is down badly, as you can see. Roblox is down 18%. I'm going to pull up their earnings and see why is Roblox down 18%, because I don't necessarily know why, but we're going to get into that. And then SMCI had earnings yesterday as well, and they collapsed 18%. Now, SMCI is a stock we talked about on Finance Junkies. Chris was very bullish on the stock at $70. It had a 6 PE. It was growing 70% year over year, and they were in the AI semiconductor chip space. So if you wanted semiconductor exposure but didn't want to go with NVIDIA or AMD, SMC was like a literal gold mine to find a company growing 70% year over year, trading at a 4 PE of 6. It went from 70 to $320 over the past 2 months, and now it's down 17%. I don't know why it's down 17%. I think their guidance missed a little bit. Market cap still is only $15 billion, and the price to earnings now is about 25, so a little bit more expensive, but it'll be, I'm going to pull up the earnings and see what happened to them as well. Now, Celsius, who drinks Celsius? Please let me know in the chat. Do you drink Celsius or not? Because I tried it once and I was like, it's not that good. So I stopped drinking it. This bad boy is up 16%. Market cap is 12 billion. Price to sales of 16. Look, software companies get price to sales of 16. Energy drink companies do not get price to sales of 16. That's just not supposed to happen. It has a 4 PE of 127. So one could argue that this is a little overvalued. However, when you're moving product the way that Celsius is moving product, it seems like people aren't reticent to drink Celsius drink. So I'm going to pull up their numbers as well. But it is one of those things that could potentially compete with Monster and Red Bull in terms of market share when it comes to just the overall landscape. I've been seeing it in many grocery stores around my area. Like, a lot of people drink Celsius, and because people drink Celsius, you know, they're moving product and the market's rewarding them. So Celsius earnings, they reported revenue they beat revenue by 16%, 281 million. So on a trailing 12 months, they're doing about 890 million of revenue per year, and they're trading at 12 billion. So they're trading 12 times revenue, which, I don't know, it feels expensive for a drink company, but it's not the worst. Now, granted, no. Sorry. They reported revenue of 325 million. The street estimated 281 million. That's different. So the street estimated 281 million, and they presented revenues of 325 million. I see a lot of you in the chat. Joel says, I'm drinking a Celsius right now. Wow. You guys really like Celsius. Interesting. Celsius in the morning, 9:30. All right. 111% gain. So that means it's replacing coffee for some people, which is also really interesting. So they beat revenue by 16%, and they grew 111% year over year when it comes to revenue. That's why the street probably gave it the premium. Because if you can keep up even 70% revenue growth for the next couple of quarters, yeah, the street's going to like it. The street's going to like it a lot. EPS of 52 cents. EPS was 12 cents a year ago, and the street thought it would be 26 cents. So they beat EPS by about 50%. That's pretty phenomenal. They're expanding in Europe, $11 million of revenue. North America, $310 million of revenue. And Asia, $1.6 million of revenue. So the ability for them to penetrate Europe and Asia is massive. Remember, Red Bull has a massive, massive brand throughout the entire world. And so that's why Red Bull has been able to really penetrate. Celsius is in the early stages. So technically, if you're looking for a company that's growing and it's early, if you're willing to overpay, Celsius might be the company. Now, granted, if we have a recession, do people still drink energy drinks? I kind of think, yeah, because it's only $2-3, right? I don't think those die away. But it's one of those things to think about in terms of what is going to be the overall demand of something like a Celsius. Patrick Investor says, I drink it daily. Interesting. So a lot of people are into Celsius. That's unique. You also just drink water, bro. Kumi is speaking the facts. I mean, Tommy says coffee till I die. I've never been into coffee, especially black coffee. I just can't drink it. I drink like lattes sometimes, but coffees are tough. But it's hard for me to necessarily drink just coffee. All right, let's take a look at a bull case, and then we'll get into Upstart. This is a bull talking about why we are in the beginning stages of a bull market. Let's listen to her argument and what she has to say and see if it makes any sense.
We're going to talk markets after yesterday's sell-off. Joining us right now is Mona Mahajan. She's the senior investment strategist at Edward Jones at the table, no less. This morning.
Great
nice
to be here.
We were on a run, then we were not on a run, then we went on a little one, then we went down. What's really happening here during this crazy earnings season?
You know, it's a great question. And look, we have had a tremendous rally in the first 8 months of the year, call it. S&P 500 went almost up in a straight line from March to end of July. Now, we were hit with not one, but two downgrades. Fitch last week, Moody's just a couple of days ago, and yet the market's down about 2 to 3% off its high. So everybody is waiting for this notorious pullback, a period of consolidation, some profit taking. But keep in mind, there is a lot of cash on the sidelines. We know about the CD money and on the retail side, and institutions have that cash waiting as well, ready to deploy. So what we're seeing is 2024 looks like a decent setup. Not only can we see a Fed on the sidelines, potentially moving lower, inflation continuing to moderate, but earnings, we think, improve next year as well. So that's a pretty good backdrop, we think, for risk assets.
So 12 months out, though, what do you think the prospect is for a higher market? I mean, in a world where some people think we already went parabolic.
Yeah, look, we think the market is in the beginning stages of a bull market phase. And bull markets tend to last, 3 to 4 years on average. Now, that's not to say markets go up in a straight line forever. There are, on average, any normal given year, 1 to 3 corrections, 5 to 10% range. We have only seen one about 5 to 7% correction during that March financial crisis period. So we do think, look for some volatility, but use that volatility as an opportunity to, we think, position in both equities and bonds, really.
So her argument is we're in the next stage for 3 to 4 years of a bull market. There will be some corrections. The first correction was the Silicon Valley Bank collapse, which is interesting because most people didn't think that Silicon Valley Bank collapse was the start of a bull market. We thought we were in an existential catastrophe, especially with everything that was going on from 2022 as a follow-on. But her argument was like, nope, 2022 was the bear market. It was the recession. It happened, started in 2021. That's over. Inflation's going down. We're in a bull market. There'll be some corrections. Use those to buy the dip, which is pretty interesting to hear her perspective. And again, her argument is that there's a lot of money waiting on the side to come in.
But why should the markets have a higher than historic valuation, historical average valuation at a time when interest rates are not 0%? I mean, what is that case? Because everybody mentions this cash on the sideline, but what is going to cause this cash on the sideline to come out and pay, a premium multiple for the S&P 500 in a time when—
Now, this is a good question because there's $2.3 trillion of excess liquidity on the sides. The host is saying, well, why would they pay 20 or 25 times earnings per share on the S&P 500 now at 448? Like, what is going to trigger that level of optimism to put money into the markets?
When theoretically we shouldn't have a premium multiple given some of the headwinds?
Yeah, look, it's a great point. And of course, we can talk about that Magnificent Seven versus the rest of the market. And we look at it that way, Magnificent Seven, about 28 times next year's earning. If you look at that 493 that's left, about 16 and a half times. So much more reasonable valuations, we think, in the broader market. And
did you catch what she said? So she said if you take out the Magnificent Seven from the S&P 500, it's not trading at 20 times price to earnings next year. It's trading at 16, which is way more reasonable. It's actually lower than the historically. Historically, it should be 18. So it's an interesting point. If you take out the Magnificent Seven, you get an S&P average that's kind of reasonable. Now, the question then becomes, well, is it reasonable to take out the Magnificent Seven? And like they've already rallied a ton. So it's like, yeah, because if they don't grow and the other 493 companies start to grow, you will still get a multiple that pushes above 20 times price to earnings on the S&P.
And so we do think where the opportunity will lie over that next 12-month period is in a broadening out cyclical parts of the market. Think about some parts of the bond market, but also think about international as well. So areas that are much more reasonably valued, we think, have that opportunity. Now, don't wholesale sell out of your AI and tech stocks. We think that's at a beginning phase of a long-term market, but fully valued at this point.
So if that's fully valued, though, you don't think that there's going to be a rotation out?
So
because I think that there could be, and
well, we've started to see it.
Right.
Yeah,
No,
I mean,
but if you get into a rotation situation, the idea that holding the guys that you think are at the beginning of this thing may actually be the mistake.
Well, we think that there probably is going to be some period of consolidation in those Magnificent Seven, large cap technology broadly, natural to take some profits after a nice run. That doesn't mean their run is over. It means that, for now we could see that market shift to the broader parts of the market, the cyclical.
So that's her case. Her case is like the big seven, which, it's not a horrible argument. Her argument is just like, look, these guys have rallied so much. They're not going to rally anymore. They might rally a little bit, but you got to, consolidate. It's going to be hard for Meta to get to 2 trillion, right? When it's at 800 billion. So maybe Meta gets to 1 trillion. Maybe there's some more upside, but it's not like when Meta was at 200 billion, which makes sense. And so if that's the case, then obviously the money's going to have to start moving into other parts of the market, which means the mid caps, the small caps, and that's where there's going to be a lot more growth, and that's where the S&P multiple can actually expand. If that is correct in terms of a general narrative thesis, and inflation gets a 2 handle by the end of the year, and the Fed officially gets ready to cut rates, because in a lot of commodities we're seeing disinflation. In a lot of different areas, you're legitimately starting to see disinflation. There's actually a great tweet by Tom Lee that I want to share on this. If that's the case, then yeah, 2024 is going to be fun. I mean, 2024 is going to be very fun. And this is the hardest part about being an investor. Is like, do you want to set yourself up to have fun in 2024, or do you want to stay on cash and wait until 20? And it's like very hard to kind of figure that out. Now, if you're long term, you don't have to stress that much. But if you are trying to time it, it is a little bit more difficult to get there fully at the right time, because it's going to be pretty hard to make the right time. This is going, so let me pull this up right here, and then we'll go. Let me also pull up Upstart, and we'll talk about that, and then we'll keep going from there. No dips, please. No can anymore. We haven't even had that many crazy dips. That's the funny thing. It's like, it's been a couple of dips here and there, but 448 on the S&P is probably not the biggest dip. So Upstart earnings, let's get here. Upstart posted revenues of 135 million last quarter. This compares to year ago revenues of 228. So yes, you read that correctly. They posted 135. Last year, they posted 228. That means they were down 40% year over year on their revenues. I had a friend who used to work at Upstart. I had a friend who worked at Upstart. He texted me while he was at Upstart. He's like, bro, I'm shorting the fuck out of Upstart. And even though I work there, because I'm going to quit, and I'm putting all my money to SoFi. He quit a couple days ago, and his shorts printed because the stock fell 18%. It was just hilarious. I'm like, this is not just some random employee. This is like a guy who'd like made some decent money at Upstart as an employee. And he's just like, yeah, I'm shorting the fuck out of this stock. It's stupid. It's like when the employee himself is telling you that the company sucks, it's really interesting, because it's like, maybe the company sucks, bro. Maybe there's like nothing here. As you can see on the stock price, it got pretty hammered. Now, Upstart is still up year to date, I think like 200% or something. Wow, 25% down. Oh my goodness. It was at $53 yesterday. Hold on. So what's the 1 year? So Upstart was $11. So it's at 40. So that's like a 3x, a little bit more than a 3x. So it's still up. If you bought at the lows, which was May 4th, 2023, if you bought at May 4th, you are still up 300%, which is incredible, because it got to 72. But it's down from 72. So if you bought in the 50 to 70 range, you're going to be bag holding, unfortunately. And then if you look out long term, right, if you bought at $401, this is why there was a recession coming. Upstart at $401. Yeah, there was going to be a recession. It was going to happen, or a pullback, or a massive correction, whatever it is. But this happened. And so now we are at 2 years later, we're in a different stage of the market cycle, and hopefully we're kind of out of it and we're getting to a better stage. That was pretty rough. That was pretty rough. Isn't that insider trading? Is that insider trading? Well, no, I mean, I don't know. Is that insider trading? Who fucking knows? I don't know how to even do that. It's different because he has options and stuff. And what he didn't accept his options. He just like moved his money to SoFi. So I don't know if it was insider trading, but he fucking did in some insider trading. Okay, let me go to Palantir as we're seeing it here. So Palantir is down just a little bit today. Well, a little bit more than a little bit, down 4.3%. Palantir is still at $16.32, so not too bad for Palantir at $16.32. but it's down just a little bit here today. Question, Amit, have you been accumulating any Enphase or Tesla? No, not a lot. I have a couple of shares of Enphase. Definitely not been buying Tesla. Look, Tesla at 240 still is a little, I don't know. Tesla at 240 is still a little, it's still a little bit, 787 billion. It's still a little bit for me. You know, at 160, that's when I should have bought and I didn't buy. And look, I have to live with the fact that I didn't buy at 180. At 240 still, for the long term, it's fine. But honestly, I just don't even have that much capital to be deploying right now at 247. I have like 5 or 6 shares of Enphase. Enphase now falling at 130. Now at 135. I think these prices are a bit ridiculous. Trading at 20 times next year's earnings, 18 billion bucks. The market opportunity. We actually did a whole episode yesterday on Finance Junkies talking about Enphase. The market opportunity is just gigantic. It's just absolutely gigantic. And so Enphase is going to be a monster over the next couple of years. But it's just a question of when that thesis is actually going to play out. Palantir being down 4% on the day. I mean, we know why it didn't collapse yesterday now with Cathie Wood buying 800,000 shares. So that held it up a little bit. Maybe Cathie's buying a little bit more today. Maybe she's starting to really develop her position if she wants to develop her position. But we will see if she is going to be able to do that from there. Okay, let's take a little bit of a bear market case. So we saw someone who said there should be a bull market for the next couple of years. Here's someone who thinks actually we need a reset in the market. And let's take a look at what she has to say.
Asset Management Chairman and CEO Carrie Firestone for more on these markets. Carrie, we saw an interesting day yesterday, followed by today. It looks like a higher open. What did you make of yesterday's action? We saw particular weakness in sort of the higher multiple sectors like software and semiconductors.
Well, hi, Melissa. Yeah, I think that we really needed to have that pause. We've had such a strong run in the market. You know, by the end of last month, it was up 19%. We've had enormous strength from software, from consumer discretionary stocks, from the tech sector and the communications companies. And so they've led all the way. And seeing that earnings were decent, the market went up through them. Now with a couple of, bad pieces of news, the downgrade of Fitch yesterday and from the on the U.S. government debt, I think that it makes sense to have a pause, a reset, and then we look to see whether earnings growth can start to accelerate into the second half of this quarter and into next year, because we need that since multiples are fairly high.
Are you optimistic about the second half of the year? Because it seems like there has been a real change in sentiment on the street in general when it comes to whether or not you join this rally. And it seems like more people are embracing the narrative that the economy will be okay and that this rally is here. We've got a lot of strategists on the street bumping up their S&P price targets to year end.
Well, most of those strategists were very negative going into the year. The majority of the banks were all calling for a recession and expecting there to be, very, very weak quarters this year. There have been. I mean, the second quarter was down. S&P earnings were down, so far 4 to 6%. And now they're backing away from that. On the other hand, the market has moved higher. Interest rates are probably peaking here. Inflation has come down from 9% to 3% or 4%, depending what number you use. And if there isn't going to be a recession, then there either is going to be better earnings going forward, or we're going to be sort of stuck in this malaise. And we heard some optimism from companies. On the other hand, the stocks have moved higher. So we're in this sort of, I would say, holding period right now where multiples are high. Apple got to a mid-30s multiple, and investors said, maybe this is a little too high right now. You look at tech names like Google, Amazon, Meta, fantastic performance out of these stocks, and there's some profit taking going on. So, we see there's potential in lots of names. Remember, the rest of the market is up much less than the S&P. If you look at most of the.
So her argument is actually a bull argument. I mean, she's making the same argument the bull case person made, which is at the end of the day, there's a lot of other names that are up. So big tech might go down, but other names have room to rise. That's not necessarily a massive correction, in my opinion, unless the entire market falls. That's more just a rotation, which is actually okay because a lot of people have made money off big tech and they would probably want to rotate a little bit more. Okay, Palantir is down 4% on the day. I'm seeing a lot of comments saying that Palantir is super red. guys, it's down 4%. I mean, it was down at 1620 yesterday when it was down 8%, or actually that was down 10% from where it was before. So 4% to me is not, again, you got to remember, Palantir's up 100-something% in the past 3 months. It was $7.42 in May. So we've got to be ready for volatility and consolidation. The biggest thing I want to stress if you're a Palantir investor is you want consolidation at these prices. If you have $18, $19, $20 prices, you know that's unreasonable. You know it's going to come back down. I'm like, we know that's going to happen. But if it stays at 15, 16 for the next 5 months, that's good. That's consolidating at 15, 16 bucks. That's what you want to see. You want to see have that be a massive level of support so that when it goes up and eventually falls, it can fall to 16, not fall to 12 or 13. I don't know if 15 or 16 is resistance yet fully for Palantir. Support for Palantir. And so if you look on the left-hand side of my screen, it seems like everything is red today. For Palantir to only be down 3.93% off an earnings that wasn't that amazing, by the way, I think that's totally, I mean, that's fine with me. I was expecting $11 after earnings because I just felt that the market gave it such a big premium. If they couldn't live up to it, they were going to tank. The market has basically decided, even if you can't live up to the premium, we're going to give you some time to grow. And that's like actually a very nice thing that Mr. Market is giving to Palantir. So I'm pretty grateful for how the stock price action has moved. 13,809 on the NASDAQ, Apple at 178, SoFi at 904. So we're seeing a massive decline. SoFi is 5 cents away from being under $9. We're seeing a pretty big decline in all areas of the market that we're seeing right now. Amit, what do you think Anduril will IPO at? Well, it's valued at $9 billion on the private markets. I think Anduril will probably be like a $18 billion company, something like that. I don't know anything about their financials, but I'm pretty sure Anduril will be a hard hitter when it comes to the public markets. Remember, Anduril is also going to be in the same boat as Palantir in terms of this going to be very polarizing of how people think about the company. And so how they present themselves and kind of how they explain how they do defense contracting, all that stuff. And if they have any shot at hitting the commercial sector, which it doesn't seem like they care about at all right now, SLG at 37 bucks. It's going to be interesting to see how Anduril, goes their way. And again, I wish Palantir had an equity stake in them because the people who made Anduril were Palantir employees. So it would have been nice if Palantir would have gotten a little bit of equity from Anduril. Yeah, we got a lot of red. Zion is down. Oracle is down. AMC is down. Let's actually listen to one final clip from Dan Ives on CNBC talking about Palantir right after the earnings. It's a 2-minute clip. Let's hear what he has to say right after earnings. He says he continues to think they are the best pure play AI name that exists in the market. So let's take a look at what he has to say.
In terms of Palantir, so we've had 3 straight quarters now where they've posted profits. So we're looking pretty good in that respect. But in terms of getting the market to believe in the Palantir story, we've seen obviously a run-up of late, but to really believe in the story, what's it going to take?
I think this is an inflection point call. I mean, if you look, this is the Messi of AI, in my opinion. And what you're seeing with AIP and their AI platform, I think it's a tidal wave of demand that they're starting to see around the corner. And that's really our call here, that it's probably the best pure play AI name in terms of them monetizing, not just on the government side, but on the enterprise side when it comes to AI. And I think we saw this. It's an inflection point quarter where this remains, in our opinion, one of the core AI names over the coming years.
I'm not sure what Will's talking about when he's talking about get the investors to believe the story. The investors have bought into the hype already. I mean, with these kind of valuations, Palantir needs 30% growth rates to justify what we're talking about here. It's forecast 12%. This thing isn't ready for prime time.
Yeah, but to Will's point, I can say maybe on the retail side, they've been ahead in terms of understanding this story. But in terms of institutional, I think it's very, very skeptical. So I do think they have a lot.
The point there he's making is really interesting. So the host is like, look, they have to grow 30% to justify this massive valuation. They're growing at 12%. Why would you, be bullish on Palantir? And Dan's argument is like that perspective that they're not able to grow that much is only an institutional bias that doesn't exist within the retail community. And he's kind of right about that. I mean, all of us at retail kind of understand what Palantir's long-term plan is and that they'll be able to get to those numbers. Now, institutional analysts are looking at it like there's no way in hell they can get to those numbers. Someone's going to be right. And Dan is siding on the fact that retail is going to be right, which is why the valuation makes sense.
To prove But in my opinion, this is going to be an accelerating growth story as we go into the coming years. Because what I see on AI, this is just, we're not even, if we're thinking about a 9-inning game, we're not even in the dugout. And there's a pure play, as a platform play in terms of what Karp and the team have built. I think it's the best one out there. And I think we see across the board just starting to play out right now. And that's why I believe the best is yet to come. I think it's a get out the popcorn moment in terms of where I see the Palantir story going over the coming years. $25 our base case.
You know, it's really exciting to hear him say that as well, because he's definitely not reticent about sharing his feelings around what and where AI is going. And look, one of the points that I haven't talked about in a while, if we are in the beginning and early stages of AI, the early innings of the game that is AI, Jensen Huang, CEO of NVIDIA, yesterday said at their conference, generative AI is just getting started now. Then there's a lot of growth in the overall sector, which means valuations are going to have to get multiples. And then if Palantir can do the thing they need to do, which is grab a little bit of that market and then show the growth that investors want to see, they're going to get a hefty premium to justify that they are one of the best pure play AI companies on the planet. But that market has to expand, and you got to give some time for the market to expand, and you got to give some time for Palantir to be able to, do what they need to do to actually capture that market. If they're able to do that, it's going to be an exciting next decade for a company like Palantir. Do you have a blow dryer underneath your desk? No, David, I do not. All right, that is it for me. Thank you, everybody. Make sure you're following on Twitter. We've got Dan Ives, the same guy you saw on CNBC. He will be on Twitter Spaces with Arnie and I Friday, 5 p.m. Eastern. So if you're not following on Twitter, please follow Twitter on the description. Going to be super exciting. It'll be an audio-only Spaces. I'll probably post it afterwards on YouTube, but it'll be live Friday from 5 to 6 p.m. And it's going to be exciting to talk to him from there. Amit, is your TV gone? No, I just actually moved it on the desk, so now I can watch the TV a little bit more easier, and also so it's not just annoying in the background. But yeah, the TV is still there, and it's right there. And thank you again to 700 people joining the live stream today. I think it was 700 yesterday as well. It really, truly means the world to me. If you are new here and you didn't come in the first couple of minutes, the word of the day is reticent, which is why I said it so many times. Reticent means when you're reserved to talk about something because you have a personal objection. It's a synonym to reluctant. So I have said that I am not reticent to share my feelings about Palantir. Dan Ives is not reticent about sharing his thoughts about AI and the market opportunity for Palantir. And hopefully when you use the word today in any scenario, and make sure you comment back under the stream after you use the word, just come back and be like, hey, I used the word in this way. You think of the market open. That'll be fun throughout the entire day. So that's it. Thank you, everybody. I appreciate it so much. It means the world to me and makes my morning every day to be able to do this. Have a great day. We'll see you on Finance Junkies discussing the Disney bull case at 7 p.m. Eastern today. Thank you, everybody. See you later.